Welcome back. You're with us, and we're looking at commodities now. We've got Manisha Gupta joining in. Manisha, apart from the monsoons, which are, really bearing down heavy on the city, what else are you tracking today?
Well, I'm looking at the crude oil prices. This is another thing that has been trading quite on a firmer note. If you look at the month of June and the quarter of June as well, that was on the positive side. And the crude oil prices right now also are trading at a 6-week highs. This is because of the strong demand that we've seen coming from US. When you look at the US gasoline demand, that has jumped up quite strongly. It's at a 2021 highs right now. And that is because this is summer driving season demand in US. And it is anticipated that it is going to be 20% higher than you saw in the last year. Also, the US jet fuel demand is highest since January 2020. So that clearly has shown in case of inventories as well, which we have seen declining in last 3 weeks itself versus a bit of a gain that the markets were anticipating. So all of those factors in sense of online demand, on-ground demand have been on the stronger side. Also, when you look at the US markets, well, the WTI is trading at the steepest premium to the next month contract. That tells you that the demand in the current month is very high and people are ready to pay premium for the crude oil prices. So it clearly is a contango and a very big one at that. And that really seems to be supporting the markets there. So we have been holding around that 85 to 88 mark in the Brent prices. And as far as the WTI goes, it has been holding above $80 a barrel for some time now. The US inventories, as I said, have been on the higher side as well. We have seen constant declines coming in for this one that has been supportive. Also, when you look at the international markets, because of the recent hurricane, there are still some supplies and facilities which are offline, slowly coming back into the markets. But that's a premium that the street also has been looking at. The recent reports from OPEC and EIA also suggest that you are looking at demand growth in this year and the next as well. EIA also has put a report suggesting that in the next year, the demand will outpace supply for 2025. So that price also seems to be adding some premium right now into the markets there. And then look at the kind of economic data that we have seen that has been supportive. The US inflation cooling for the third straight month in the month of June to 3% has been supportive. The street is now anticipating and looking at an almost 85% probability of the first rate cut coming in the month of September. Well, that has been supportive. We also have seen a decline in US dollar index, the treasury yields, and that has been supportive. And then, of course, it has been about the Chinese data, where the property sector is not doing so well and the imports have kind of declined as well. But the export markets clearly seems to be jumping. So that tells you that while the domestic demand in China is not picking up, but the world over rest is, and that clearly has been supportive yet and again for the industrial commodities.
Okay, thanks a lot, Manisha, for that.